US stocks are on a wild ride, tumbling, surging, and swinging unpredictably as Wall Street gets rattled by President Donald Trump's aggressive tariff policies. From Beijing to Brussels to the New York Stock Exchange, the global economy is reacting, and not lightly. On Monday, the Dow plunged by more than 840 points. The S&P 500 dropped nearly 2%, and the Nasdaq followed close behind. Investors are scrambling as fears grow that Trump's tariffs could tip the global economy into a recession. What sparked this market chaos? It all began with Trump's announcement of sweeping tariffs, including an additional 50% tariff threat on Chinese goods. Traders hoped it was posturing. Rumors swirled that the White House might pause the tariffs. For a brief moment, stocks surged. The Dow even bounced back nearly 900 points, but it didn't last. That hope was crushed when a White House official called the pause rumor fake news. Aus Tautiste. Just like that, the market gains vanished. The volatility reflects deep investor anxiety. Art Hogan, chief market strategist at B. Riley Wealth Management, called it a clear sign. The market wants rational thought in trade policy and hasn't seen it yet. Between 9:43 and 10:17 a.m. Eastern, the S&P surged 8.5%. But as clarity faded, so did the gains. It's what analysts are calling fear-based selling. Rapid emotional reactions to headlines rather than fundamentals. On the global stage, European Commission President Ursula von der Leyen signaled willingness to negotiate, offering to eliminate tariffs on US industrial goods. But at the same time, the EU prepared a list of American imports.
We prefer a negotiated settlement, but we are preparing for all scenarios.
Meanwhile, President Trump doubled down. He took to social media, threatening more tariffs unless China removes its retaliatory duties. He claimed other nations were lining up to negotiate, but gave little indication of a clear trade plan. That unpredictability has markets shaken. Wall Street's fear gauge, the VIX, is spiking to levels last seen during the COVID-19 pandemic. The broader concern, the US may be teetering on the edge of a bear market. The S&P 500, which hit a record just weeks ago, is now flirting with a 20% drop. The technical definition of a bear market. Analysts warn that Trump's tariffs could derail growth and hike consumer prices. J.P. Morgan CEO Jamie Dimon, in a letter to shareholders, warned tariffs could raise costs and slow the economy. Goldman Sachs echoed that, saying recession is a real risk if tariffs escalate. Trump, on the other hand, sees things differently. He argues that tariffs bring in billions and lower prices, citing falling oil, food, and interest rates. He's even suggested that a market downturn could be a useful bargaining chip.
If they want to talk, I'm open, but it has to be fair.
But critics say the volatility itself, these sharp ups and downs, are signs of investor panic, not confidence. What's next? On Wednesday, the US is set to roll out even more tariffs targeting countries with large trade imbalances. More are expected on auto parts, pharmaceuticals, lumber, and more. If all goes through, it would be one of the most aggressive protectionist moves by a US president in modern history and could solidify the fastest bull-to-bear market transition ever for a new administration. As the market trembles and world leaders weigh the next moves, one thing's clear. The stakes are high. Wall Street is watching. World economies are reacting, and the pressure is on. Stay tuned, because this trade war is far from over. Don't forget to like, subscribe, and hit the bell for the latest updates on markets, policy, and global finance.